Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is our Market Insider TV opening commentary, and it is Monday morning. It's September the 8th. Thanks for joining us this morning. We're going to take a look at our trading day ahead. Do want to mention I will be doing RFD TV this morning at 8:15 Central Time, as well as Wednesday, Thursday, and Friday of this week. It's a full trading week as we're in September here, and next couple months don't have much in the way of days that we'll be taking off for any type of holidays. So this week on tap, we have PPI, CPI Wednesday, Thursday. Supply and demand report comes out Friday. Crop progress, of course, conditions report this afternoon. They will still be released today. So we're looking at overnight markets. First of all, we have U.S. dollar index a little softer this morning. Natural gas is firmer along with crude oil. A lot of times these markets will go opposite directions during the same session, but today they're both higher. Natural gas threatening to break out to the upside. S&P futures are stronger here this morning, up 14 points or so, rebounding from some losses on Friday where we touched some support, and we're about 50 points off of those S&P futures losses that we saw on the lows on Friday. Gold and silver also stronger this morning, while corn's down 1 3/4, beans up about a penny, penny and a quarter, and the wheat is 2.5 cents higher, which good sign for wheat. Maybe it's reacting to the U.S. dollar, but there was a little news that we'll talk about here in a second about world production that is slightly bearish for the wheat markets. So let's talk some more specifics of these markets, what we can expect in our day ahead. Make sure you go to our website, which is MidwestMarketSolutions.com, where you can sign up for our daily newsletters, our video series, as well as our text service and Twitter feed. So I hope you have a chance to do that. All right, looking at the news this morning. So we have a fair amount of news coming out over the weekend. First of all, let's look at the weather. This week's forecast suggests much warmer temperatures across the Midwest. 6-10 days of normal to above normal temps, and that will aid in field dry down, specifically for the corn. A lot of producers starting to get harvest going, and it is very dry on what I'm being told. So yields would certainly be there. Now, if we can get some help from weather, we will get a little bit warmer temperatures, dry this crop down a little bit, and the harvest will really ramp up over the next 10 days, according to this forecast. So I mentioned this briefly coming up this Friday. Next supply and demand report from the USDA. It comes out at 11 a.m. StoneX estimates national corn yields expect to be 186.9 bushels per acre. That's down from 188.1 in August. We are submitting our numbers to the news wires this morning, and we expect we're going to come in, I think, somewhere between this 186.9 and maybe 183, somewhere in there. We'll get our analysts put together and submit our numbers, but I think we'll probably be lower than what the StoneX number is. Using USDA's harvested figure, production is going to be 16.5 billion bushels, new record large crop. That is 165 down from last month. Could be a little supportive to corn, but soybean yields expected to fall as well this month. Production at 4.257, down 35 million from the USDA number. Again, these could be slightly supportive to the market, but I don't think they'll be bullish by any means. I think we could see some pressure here because the harvest starting to increase. We're starting to see a little bit of harvest activity that could put some pressure against these grains. Private analyst APK Informa raised their Ukraine corn grain production numbers from 53.2 up to 58. That's a big jump, and wheat was one of those big moves. All grain production was a big jump, and wheat was all 2.2 million tons of that, as that is expected to increase. That's a lot of a crop for wheat in a world production numbers, and corn is significant as well, as China loves to buy Ukraine corn, and this tells us that they're ramping up their production once again, despite some of the wars and the infighting that is taking place in their country. Last week, cash cattle trade, we may have peaked this market, and we may have peaked the futures last week as well. Cash trade in the north, 242 to 243 live, 383 dress. That's $2 to $3 lower on a live basis, $2 lower dressed. South was a little firmer, steady to firmer, 242 to 243 live. The boxes is what is very concerning as well. Cutouts were mixed. The choice was actually down 20 cents, but select was up $1.93. We were sharply lower on Friday in these cutouts, and we've been very concerned that we're going to see a drop in the cutouts post Labor Day, which will lead to a drop in the cash markets and a drop in the futures. We've closed down either 3 or 4 consecutive sessions lower in live cattle. Depends on which contract month you look at, but either way, we haven't done that in a really long time, and could see additional weakness here to begin the week. Cash calls are steady to lower to start the week. Have a great day, everyone. Good luck and good trading.